It's Brian Preston, the money guy.
Here, I'll ask you this first one because it's one that we've talked about a little bit before, and you can answer this one pretty quickly. This is from Jeffrey. He said, should my military retirement be part of my net worth statement? I'm going to expand that a little bit. Is how do I think about pensions or other sources of future income? How do I show that in my net worth statement, or how do I think about that when I'm doing my annual net worth statement?
Well, I'm going to first talk about the concept, and then we'll go specifically into his question. Promise income streams are not the same as assets that go on your net worth statement. So what I mean by that, and then I'll bring it back in before you freak out, Social Security. A lot of people are like, well, where do I put Social Security on my net worth statement? Or where do I put that pension on my net worth statement? Well, if it's just a promise of future cash flow or payments to help you through retirement, I think it's a footnote to your net worth statement. It's not actually an asset. Now, there's an exception to this. What about pensions where every year they send you an annual statement with a lump sum opportunity of what the benefit that's accrued to this point? Yes, it potentially could be future cash flows, but if you so choose, you'd also could lump sum elect to transfer this into a qualified IRA or roll it into an employer retirement plan. That's different. As soon as they give you the option of what your vested balance is, you can put that on the net worth statement. That's a retirement asset, and I would also say that that counts towards your 25% annual savings requirement. You can put that on the net worth statement if there is some measurable lump sum option. And that doesn't mean you're necessarily taking the lump sum, by the way. I've shared it so many times. A lot of these pensions made promises that are just, they're pretty big. I mean, they're huge. They overpromised in a lot of ways. So before you take that lump sum offer, because they might send you a letter or two saying, hey, unique opportunity here. Why don't you take the lump sum and let us out of this obligation that we signed up for years ago? A lot of you are going to see that six-figure number. You're like, hot diggity dog. This is the time to jump in. Do the math, do the exercise, do the homework, because they might have promised you a lot more over here than this is actually worth. And, and by the way, I would probably say it goes 50-50 on whether people should do lump sum versus just keep the pension as is.
And it changes through time.
So you need to actually do the homework. I wish I could give everybody one-size-fits-all advice on take the pension lump sum or take the cash flow. It really is so individualized to how your pension was set up as well as where you are in your journey to creating financial independence.